We've been known each other for since when I was doing a Wolfman's in year 20.
It was a long time ago. It was in New
13,
York.
like
Yeah, yeah.
more than
10
10 years,
years.
more
Yeah,
than
yeah,
10 years. Time really flies.
It does.
Yes. So, and since that you've been in crypto space for about a decade.
Yeah,
And
almost
then
decade, yeah.
now you're working as the Vegaexholdings. So can you explain a little bit about your company so that people would understand what you're doing?
Sure. So Vegaexholdings is a technology company first and foremost. So what we develop is trading infrastructure for digital assets. And then we use that infrastructure to also trade our proprietary fund and create strategies for investors as well. So the core thesis for Vegaexholdings was that digital assets are really hard to understand, right? Like even for us, we learn every day, and it's hard to manage, right? So when we think about stocks or bonds or equities, the infrastructure is very robust, right? You can choose your app, you can choose your broker, like there's so many things that you can do. But when you think about digital assets, it's actually, as ubiquitous as the term is, it's very limited, right? Like what are your options when you think about Bitcoin? It's like you think Coinbase maybe, and then you kind of fizzle out, right? You don't have a lot of ideas after that. And so our core thesis was that, the infrastructure behind digital assets is lacking. Right. And so it's very hard for normal investors that are not in financial services to invest in the products. And our goal is basically to develop the technology and become the interface so that investors are able to easily consume digital financial products.
Thank you so much for the telling and the quick explanation about the Vegax. So, like, starting with the 10 years ago back, like you've been starting as a dark matter, and then I checked the YouTube channel that you are doing a pitch at the Korean blockchain week about the dark matter and the token project as well. And then what made you decide from there to now Vegax?
Yeah.
Because there you have plenty of experience in the scene.
So, I think it's actually an evolution, right? Versus like it's a pivot, but it's also an evolution. So how, I got my founder experience started was I used to be an investment banker in New York. I thought that financial services, particularly institutional products like private equity funds, venture capital funds, et cetera, was very antiquated, right? And so there were multiple reasons behind that, but one of them was that it was heavily overregulated, right? So how US regulations work typically was there's public and private, right? Markets. There's private markets and then public markets. Public markets are what investors see, like, Tesla stock, right? Or Palantir or Microsoft. Private markets you don't see, but it's exponentially larger than public markets, right? So banks invest in certain deals. A lot of people probably ask, like, how do you build buildings, right? Or invest in buildings. That's all private deals, right? So actually there's a ton more capital moving through private markets, but most investors couldn't access it. So that's the genesis of dark matter. We wanted to make it more accessible, and we wanted to provide the technology platform to democratize access to these private investments. Problem at the time was it was illegal. Right? So it was illegal because private investments by definition have to be private. So you cannot publicly advertise a private investment, right? Have you ever seen a startup put up a billboard raising money? No, you can't do that, right? And startups are loosely regulated because they're kind of its own small ecosystem. But when you think about private equity funds or hedge funds, these mega hedge funds, you've never seen an ad. You've heard about them on the news,
but never
like
seen
Bridgewater. Have you ever seen an ad?
No.
You've never seen them marketing, right? That's because they're not allowed to. Right? Illegally. You're not allowed to invest because the private definition, by definition, is that you can only talk to investors you have a relationship with, right? And this is why you use brokers and things like that so they can smooth that legal requirement. But in actuality, broadly speaking, this is all kind of in jest, but broadly speaking, you can't sell to many people because there's no way you can reach them. Right. And so our idea was you need to decrease the regulation. So I actually helped write a lot of the Jobs Act, down in Washington, D.C., work with like regulators. The second was the first one was you need to decrease regulation. Second one was everything is offline, so you need to put it online. right? Hedge funds didn't even have websites because it was illegal, right? Because the act of having a website was considered advertising,
Oh my.
right?
Yeah.
Because what are you going to put on the website? My name?
Deals.
Like they're nothing, right? You'll say my returns or this is what we do. Like you can't, or you can't put it there, right? So by definition, they couldn't. So what we wanted to do was make that sticking point open, right? And then we'll say, oh, more retail investors, more accredited, not retail purely, but accredited investors can access these investments, right? And so that was like the genesis of dark matter. You know, you fast forward from like 2013, that's like when the Jobs Act was finally ratified, and you start fast forwarding. What ended up happening was financial services took a huge investment into technology. So you go back before 2008, basically, there was no investment in technology in financial services.
No boat, nothing at all.
Maybe high frequency trading, but even then it was very, very early, right? Like, you know, they were trying to get closer to the stock markets, right? Like it was very early because servers were slow.
Right.
Cloud computing wasn't really that active at the time. And so financial services never invested in technology. You know what they invested in? Compliance, right?
Oh.
So one of the biggest costs, for example, for JP Morgan, I think about 5-6 years ago, was their legal costs. That was their biggest line item. It was double-digit billions of dollars to protect against regulators and lawsuits, right? It's cheaper to protect than to get sued, right? And so financial services, by definition, only has two risks. Do I have enough money or do I get sued, right? And so they never invest into technology because efficiency wasn't a problem. If I was the best, I was the best, and that was kind of it, right? And it's very sticky to change over. But then competition started increasing, more fund managers, more banks. And so people said, oh, we need to invest in technology, right? And this is also about the time that Robinhood started taking a big stage, right? What do they effectively do? They're a marketing platform, right? They're not an investment bank. They're a marketing platform, and yet they became one of the largest financial platforms, right? And so that was the start of it. But they started investing into things that made their internal processes cheaper. So they got rid of middle office, and they got rid of like compliance guys. They got rid of people do paper pushing and things like that. When we were at Dark Matter at the time, we said, well, we'll do a lot of that paperwork, right? We'll do the paperwork. We'll become the conduit between the investor and the platform. Problem, though, was the technology wasn't there to do that. The regulation said, if you are going to sell a financial product as your job to an investor, you have to be licensed.
Which license?
You have to be a broker dealer. You have to be licensed Series 7. You have to be Series 24, whatever. What are any of those investment banking licenses? But the important thing was that meant a person needed to do the transaction.
So no, like a bot, no technology. You
By
can't.
definition, you cannot.
Wow.
Because it cannot be done. So ultimately, let's say, oh, this was automated, this platform, and this investor found this. They'll say, who coded it? Right?
Yeah.
Oh, did you collect the fee? Did the person who coded the fee, got the fee? Are they licensed? No, it's illegal. Right?
Interesting.
So there's no way you can make money. You can do it for free.
Yeah.
Ironically, you can do it for free, but you can't charge for it.
Wow.
Right? And so, you know, we racked our heads. We did larger institutional deals. We had to make money as a startup. And then fast forward to 2016, blockchain started becoming more active, right? Blockchain was a thing before that, you know, DLT and people.
Right.
We talked about it in our team. But 2016 comes and the Ethereum was also kind of taking main stage, et cetera. And what I kind of realized was, oh, this was the missing piece, right? Like smart contracts per se,
Smart contract, yeah.
but a way to actually automate it two ways. Right? So that you don't have a broker in between. That was really important for us as a realization. And that's when we started pivoting more into Vegax and our blockchain companies. So we started investing heavily into tokenization and institutional grade, you know, exchanges, DeFi, et cetera. And then FTX happened. Right? And so, you know, ironically, I'm glad for it. I'm glad for it in a way. I mean, we had our own pains, our clients had pains, but I'm glad for it because it was like a huge learning experience about what could potentially happen in the space. But also, it opened up a lot of different opportunity on like what infrastructure needed to be built, right? And so that's why I said, you know, Dark Matter to Vegax was more of an evolution, was that the vision of democratizing financial assets ends with tokenization. That is the end of it, right? My journey has been all the ups and downs of trying to get there, but ultimately it ends at tokenization. Well, one part of the journey ends at tokenization, where financial assets live on chain. Everything else is automated, right? Or pretty automated. And I think we're getting there now. But in order to get there, what I think people underestimate is the amount of infrastructure that needs to be built, right? So as an example, there's like trading software, right? That you can interact with as like a retail or like a hedge fund, et cetera. That typically connects to your brokerage account, right?
Something like Bloomberg?
Yeah, kind of, but like it's like software that you can trade. Like it's like TradingView, but you can actually trade stuff, right?
Okay.
You know, any of those like AlphaSoft, like any of those softwares, and they connect to your brokerage account because your stock has to be somewhere.
Yeah.
Right? Like it's not with the software, it's with the financial firm. You can't do that with crypto. There is no software like that. You're trading on exchange, right?
Yeah, right.
As you know, you're just trading directly on exchange.
Yes.
That's chaos, right? That's like you trading on NASDAQ. There's a reason these things don't work that way. Because they did it and it didn't work, right? It's security risk for the exchange that so many people are interacting with it, right? Real stock exchanges are air-gapped. Like you can't even access them because of security reasons. But right now, the whole world just interacts with exchanges,
Yes.
right? And so what I mean to say, it doesn't mean we need more intermediation. It means those layers of security and efficiency don't exist.
True.
At all now. And anything that we have, you can't use there. It's on chain, remember, right? So software doesn't work on chain. You can't take a piece of offline software and put it on chain. It's impossible. You have to code it on chain, either via smart contract or whatever. So the infrastructure overhaul it's almost like going analog to digital, right? It's like going from telephones to mobile. It's that drastic, right? And we haven't built any of it yet. Like almost none of it exists. And so I think, you know, that journey of how we got from dark matter to Vegax is really important, but also the start of it is happening now, right? If we considered everything for the last 10 years to be maybe the first inning, we're maybe at the end of the first inning. You know, people ask like, oh, crypto is expensive, like everything's really high. I'm like, it hasn't even started yet. We don't use it. Do you use it? I don't use it, right? And I've been in 10 years and I still have yet to use it, right? What does that mean? It means we haven't started yet. Yeah, and I think that's a really important realization.
Right. So let's go back to the FTX incident. Do you, at the time, I remember that you've been already dealing with the money, the capitals from your investors, right?
Sure.
And then did you lost money from FTX?
Yeah, we had our hits too.
Yeah.
You know, I've made my share of mistakes, you know, on this journey, like
Yeah.
personal and professional.
Yeah.
But we've had our hits through FTX.
Yeah.
You know, and probably sold some claims too early, like et cetera.
Yeah, yeah.
Considering now, but you know, it's not. Like it ended up well, like FTX, like we were affected, like everybody was affected,
everyone.
right? And sure, they're out of bankruptcy, or a lot of people are out of bankruptcy because they were out of it. But I don't think it matters. What matters more is that it happened. Right?
Oh, makes sense.
The chance of it coming out like this, you know, more than you put in,
Yeah.
is very bizarre. It's very weird, right? It's like, it's almost mathematically like so improbable that you have assets that appreciated that much. You know, I heard recently that the lawyers at FTX have billed $6 billion or something like that.
Yeah.
And they're still going. They're still billing, right? And there's still money left over.
Yes.
The Anthropic investment is enough, I heard,
Yeah.
to cover the whole thing, right?
It was great investment.
Yeah.
Actually. Yeah.
And so, like, does it really matter? Does the money matter? Sure. To the investor, it matters. To the industry, doesn't matter? I don't think so. I think it's actually maybe even detrimental that people got their money back.
Right.
Because you kind of forget
Yes.
that how terrible it was
Yeah,
when it
yeah.
happened. But yeah.
I think the FTX that happened, also Luna that happened, was the I believe that was the moment people realized this is something off the track. But at the same time, there is clearly we are able to see what we really need in the crypto space. And then I believe that at the time, a lot of blockchain startups went bankruptcy. Also at the same time, a lot of B2B blockchain startups came out to the market. And it's been even though that happened, still we are on the way to become an institutionalization, including the Bitcoin ETF and Ethereum ETF. And then as we talked about before, it's a quite interesting transition from the legacy financial services and into the crypto institutionalization in crypto. And then you mentioned about there's a key difference between these two markets is there is a machinery involvement heavily into this one. Can you, as an Vegaex CEO, can you explain more about this transition?
Yeah. So, so when we think about the institutionalization of crypto, for people that have been in the space a long time, we used to joke about this because there were years around 2018, I think. Everyone talked about the institutions are coming, right? I don't know if you remember that, but like that was the Twitter theme. Like institutions are coming. They never came, by the way. Until the ETF. The institutions are coming was like every day. People were shilling the hell out of Bitcoin and crypto, et cetera, right? So the reason, and the funny thing is before that, when I first started in crypto, if you talked about institutions, you were the enemy.
Oh.
It was like you were the enemy. Like you go to these conferences and then you talk about like Goldman, they're like, oh my God, you're part of them, right? You're not part of the blockchain ethos. Like you're not a maximalist, like, let's take over everything, right? And then it changed to institutions are coming and then they never came. And then ETFs are coming, So this is the trend. But the institutionalization of crypto is different than institutions investing into crypto. And so what I mean by that is one step, like buying Bitcoin exposure. That's just like buying gold or something. The institutionalization of crypto is that institutions are going to start using blockchain for their own uses.
Oh, right? So that's going to be an actual use case for the institutional, right?
That's right. But the problem with that, I don't want to say problem, the nuance to that is that they have to buy those tokens, right?
Makes sense.
So if I'm building on Solana, I'm building on Avalanche, I'm building on whatever, I have to buy it to pay the fees, right?
Right.
To use it or to test it or to develop it. So what happened? They're going to start buying it. That's really the institutionalization of crypto, right? To use it. That's the funny part. But I think, this is me personally speaking, but like my opinion is that financial services is an interesting industry. And what I mean by that is it doesn't do anything. It's an intermediary.
Yeah.
Right? It doesn't produce anything.
True.
Right? It doesn't it protects your money, it grows your money. It doesn't really do anything, right?
Just
it doesn't
agency.
dig the ground. It doesn't grow cows. It buys cow futures, something like that. And I'm not putting financial services down. I think, I'm a finance guy, and I think it's extraordinarily important. But the reason I bring that up is because blockchain is not the death of financial services, right?
True.
Financial services just evolves. It just changes, right? But the financial services as a concept will exist forever, right? It's just, what is that concept, right? But when you think about the companies in that industry, they're going to have a really hard time, right? So, I use this analogy a bit, which is when Amazon started coming up. And then, there was these mega retailers in America, like Macy's, and there's Walmart, there was Woolworth, there was all these mega retailers, huge department store type places. And they all laughed about Amazon. Because they were like, why would you ever buy anything online? Doesn't it sound very similar to Bitcoin? Like people talking about Bitcoin, right? Like, why would you buy Bitcoin? Like, there's nothing there. It's like, why would you buy pants online? That sounds crazy to me. Like, you can't buy groceries online, right? But the key was not buying online. It was that Amazon was leveraging that infrastructure to control supply. Supply chain management, right? They don't actually make money on selling stuff, but it's like Costco. they knew what the actual leverage was. Leverage was owning everything, not selling stuff, right? That's what the internet gave them as technology. And that's what I think the next phase of financial services is going to be. People think about what's going to be important, right, in digital assets. I think the institutionalization, the mistake right now is like if you have more Bitcoin, like this is going to be super powerful. No, what's going to be powerful is the person that understands where everything is going. It's fully transparent now.
Right.
But that also means it's so much data that you can't consume it. But there's going to be a technology firm that understands that. And somebody that uses it as a hedge fund, whatever, that's going to be extraordinarily powerful, right? We won't have any, like secret meetings to do stuff and like, finance guys and saying, oh, we're doing backroom deals, because you'll just see it on the chain, like moving in and out. And then you're going to try to react to that, but you can't because everybody else has a machine that reacts to what's happening.
True.
Right? And so when we think about automation, when we think about machine learning, we think about AI, I think that's really interesting because the more digital our economic flow becomes, which is like right now, right? We're turning data into money,
right,
basically. So that's like, at least for now, that's the ultimate transition. The only transition that is greater than that is turning energy into money. But we haven't been able to do that yet, right?
Not yet.
Not pure data, energy, I mean. So we can't do that yet. So we have data. But data into money means it's so complex that you're going to have algorithms and AI doing everything. Like even in our firm, like 98% of what we do is automated or machine learning, et cetera. And it's not because like we don't think we can invest better. It's because it invests better. And we know that our competition are machines too. They're not sleeping. It's 24/7.
By speaking of machine in other the trading companies, because no trading company talks about their bots or their algorithms and everything. So how do you guys internally, how do you guys know what they're doing? And then is there so for example, like before AI, it was machine learning. And then machine learning requires a lot of data, right? So you need to set up infrastructure to compete with those machines. And how do you doing and how do you become beat them down? Yeah.
So I still think the digital asset space right now is a blue ocean, right? Because it's just very, very early, right? And like you said, data is super important in automation or any kind of automation, whether it's supervised learning or whatever. But because of the nature of the asset, it has so much information already. Right. And so like the problem with equities is all you have is price. Right. And the problem with equities and price or price and volume, and you can make up a bunch of indicators. But the problem with that, it only trades from 9 to 3, 5 days a week. So you need 30 years of data to make anything useful. Right. So when you read research papers for equities, it's like from 1986 till now. I'm like, wow, that's amazing. But when you look at the amount of data, it's not very much. Because from like the 80s to 2000, like the tick sizes were so large that like, it's like, it doesn't even matter, right? It's like, oh, it went from $1 to $3, right? Yeah. But right now it's like changing at like 1/1,000,000th of a cent. And you can see it at like the most granular level. You can analyze it on-chain, off-chain. You can analyze volume across exchanges, et cetera, because they're not consolidated yet. So the amount of information right now it's too much, actually.
Right.
It's actually, that's not the constraint. The constraint is creating your own pipeline, right? So every firm does that. That's why you don't have like a service that does that, which is they don't like it. Right. So TradingView people use, but the people only use it until you create your own pipeline. Right. So you draw in all sorts of data and then you like analyze it. Do we know we have it better? I think we're better than most, but I think the difference right now is that the competition is very low. Right. So we're primarily competing against retail. Right.
Which is easy.
Yeah, which is easier for machines, right? Because statistically, there's certain behaviors that we understand. How do we know what the other firms are doing? We don't. like there's news and stuff like that, but we don't largely know what they're doing. We can understand what firms are doing when there are arbitrage or some kind of alpha opportunities that exist in the market and they disappear, because that means someone took it, right? Because then we can understand style, right? Because as automated as things are, there's a style. Like every firm has a style, right? And what they do is their bread and butter, right? High frequency market making or momentum trading or something like, there's different styles. So that I think is very important. But right now, I think the market is pretty, it's not that dense, right? So we can see what other players are doing in the market. Well, our system can analyze like different movements, and we know when things are being manipulated a little bit, et cetera, et cetera. So that's why I think crypto is like a blue ocean right now, because you look at equities, it doesn't move. It doesn't move because it's hyper competitive, right? So if there's some juice, like someone's gonna take it like right away.
Yes.
Right. Otherwise, if something happens and you don't take it, that means something else is off. Information or risk or something, right? So I think there's no free lunch. But crypto seems to have some free lunch right now.
Right. Yeah. So there are definitely, when we talk about the US financial services versus Korea financial services in terms of how crypto space evolve with those two markets, I heard that the US, is like a Citadel, something like them, their high frequency trading solution is so amazing. Rather than other countries, and then just have a lack of information about them. And then since you're from New York, how do you see them, and then what they're going to be the next in terms of from the legacy finance in terms of do you think they're going to switch it to crypto space with that the same arm or different arm? Yeah.
So when I think about whether, so I think there's two types of firms, right? There's the incumbent. The whole thing is like the incumbency, right? The people that exist and protect the existing structure. But then there are asset managers, and then there are financial institutions, right? There's the banks and brokers and things like that. So the financial institutions, their problem is because of the regulatory environment, it's very difficult for them to make money. Because they're not allowed to trade.
Yeah,
that's a big one. But they have to provide these like financial products to clients. But the cost of compliance, right, is getting higher, right? Because every time something bad happens, the SEC or FINRA says, "Hey, you have to do this. You have to do this." Every time somebody sues, then they get sued. They have to pay a fine. So it's getting like more and more expensive. Firms like Citadel and asset managers are different, right? They can effectively do whatever they want. Right? They're a fund, right? So they only have to apply to the hedge fund rules, which, as I mentioned earlier on the podcast,
don't go public.
You can do whatever you want.
Yeah,
that's the reason it's private. You literally do whatever you want. Right?
Interesting.
I mean, there are rules. I'm being a little like tongue in cheek about it, but there are rules, but a lot less rules. Like if we think about a stock having 100 rules, a hedge fund probably has like 0.01 rule that it has to apply. It's like, don't take their money and like buy a Ferrari. That's the rule, right? Tell people what they're doing, kind of thing. So I think will they evolve into crypto? So recently, jump trading was in the news, right? A lot, because they were very active in crypto. They shut down that arm entirely. Then they started selling their crypto like on chain. Now it's visible. Now you can't hide, And they were selling it kind of like very inefficiently, right? They were just like dumping it in the market.
Dumping.
Why they did that, I don't know, and I don't want to, I don't want to conjecture here like what happened there. I'm a conspiracy guy, so I'm like, maybe this is some kind of move, some market making move, like super strategic, that they're making things fall to buy cheap. I don't know. I always think like that in crypto, and people are like, "You're crazy." I'm like, "You're crazier for not thinking that," right? Like all of these people are doing the same thing. They have like buy orders right below your order, right? Because they know you're gonna sell.
Exactly. So about the jump trading, jump trading just starting as a crypto trading company, right? Or
no. They're a legacy shop.
Oh,
they're a big market maker.
From the legacy.
Yeah, Jump Trading, Jane Street, like they're all the high frequency market makers and high frequency trading.
Right. Makes sense.
Quantitative trading shops, HRT, like all those famous guys like Two Sigma. But Jump Trading was like major, like high frequency trading market making firm.
Yeah.
Like Citadel. But they were, I guess, a little bit more technology forward. And they were also the first to take a major step into crypto. And then they were also the first to take a major step out of crypto. So why they did it, I don't know. Back to your question, will people enter the space? Will Citadel enter the space? They will if it's profitable, right? And so is it profitable now? Yeah, but I guess the question is why don't they do it? It's because they have a hidden cost, which is intrinsic risk. It's compliance risk, right? So when you think about, do I make $1 million? And for these guys, it's billions of dollars of revenue, right? Do I make $1 billion to jeopardize my $10 billion business? No way.
No way.
No effing way. Never gonna touch that shit.
True.
It's a bag of poop that's on fire, right? It's like, get that shit away from me.
Yeah.
The moment I touch that, the SEC is gonna come raining hell down on my head. I don't care if it makes $1 billion. I'm making 10 billion here. I don't care. This becomes 15 billion, they'll come in. Yeah, for sure.
For sure.
For sure.
Right.
Right now, what's their major problem? Regulations and liquidity. It's not liquid enough. We're all excited about like $1.2 trillion, $2 trillion. That's not an asset class for these guys.
Yeah.
Like if you think about institutional, they need to do like billions of volume a day
Yeah.
to make a couple $1 million, right? This is not a market for them. Right? It's just a playground right now.
Playground.
Yeah,
So
it's a
true.
playground for them. It's nothing. It's like one stock.
Yeah.
Right? It's like one stock.
Bitcoin.
Yeah, but it's like a diversified one stock. And then the only things I can really trade are Bitcoin and Ethereum. And that's not a place you know what I mean? Like when you think about a guy who's been in a hedge fund space for 20 years, fighting regulators for that long, like getting fined, why would I touch that stuff?
So
I think that's the easy logic, right? Yeah, from the crypto perspective, we're like, this is the future, right? This is the future. But like I said before about Amazon, it's like pitching to Walmart in 1994 that they need a website to sell their stuff online. It sounds crazy, right? It sounds insane to them. They're like, what do you mean I own America? Why would I need a website to sell my stuff? Why would I need more trouble? I'm selling stuff already. The only time that becomes trouble is when the online takes my business, right? That's the waking point that we're waiting for, right? This institutionalization of crypto. The people that are doing it first are saying, I don't want to get caught with my pants down. I don't want that breaking point to come and be like, oh, you were late. But their problem is they're already late. The
True.
fact that you're thinking about it like that, you're already
late.
Yeah.
Yeah.
The future of financial services is technology. It's not going to be finance the way we think about finance. Banks are going to be development shops. They're going to look a lot more like Google than they do like Goldman Sachs. Or actually, Goldman Sachs is like 80% engineers apparently right now.
Oh.
Yeah, they only have like the really senior bankers and like everybody else is engineers. Yeah.
Wow.
So like, if you think about that, right? These firms as a DNA are these old school service providing compliance places, and they have to turn it to Google. Like instantly. It can't happen.
Cannot happen.
It's too hard, right? It's too hard. So do I think the next major player in financial services doesn't exist yet? Absolutely. It doesn't exist yet. It's like Amazon. It doesn't, that class doesn't exist yet. And the question of, do they become that? No way. No way.
No way.
I mean, an existing business did not become the biggest website. Right? You can't. It's just a different. It's not because they're incompetent or that it's physically impossible. It's just not their business.
Right.
It's not. You don't ask a jjajangmyeon chip to start making pizza. It's not their business. Right. That doesn't go well.
Right.
You know. And so I think the next phase of these types of firms will look very different. They're going to hire very differently. The core crux of it is going to be different. The funny thing is these new firms are not even going to have compliance issues.
Oh.
Because the AI is going to do all their compliance. Compliance is effectively, did you tell the investor the right thing? If an AI is doing it, it can never do the wrong thing.
True.
It can never lie or misrepresent. It'll just tell you what it is. It'll record it. It'll take the response of the client, and it'll make sure all the paperwork is in order.
Right, right.
Yeah. Make sure they signed it and read it, right? You don't need a guy checking, did they sign it, read it? No, there's instantly. They did it, right? So if compliance becomes automated and risk becomes automated, what else do you have? Just engineering. It's just engineering.
Right.
Yeah.
So from your Vegax company, since you have a brilliant engineer team, and there's not much of competition going on, but there's definitely somebody wants to come in, come to this market, and they're trying to want to compete, and they're trying to make something profit out of it. If you want to tell like a young entrepreneur who wants to be in this business, what would you tell them how you want them to start their career as a starting point?
It's a good question. Let's say don't do it. Like, you want to be a founder, like don't do it. No. I think it's hard. In our space, I think it's really hard. I think it's hard because, you really have to be like I don't want to say a polymath, but like, it's not really a business, like you're selling something to somebody or whatever, right? Like there's a philosophical argument to it. There's a technology argument to it. There's financial, there's regulatory. So it's like, it's complex. And so like what most people do right now are they trade or they like go into a firm. So I think my recommendation would be to join a firm first.
To trade?
Not necessarily trade, but to understand what blockchain companies are thinking about. Because they're not thinking about the same thing as other companies.
True.
They're not. They're not thinking about their like AWS costs, or they're not thinking about like, CTM. Like they're not thinking about stuff like that. They're thinking about like congestion costs on layer 3s, that talk about interoperability and zero knowledge. Like they're thinking about stuff that just doesn't even exist yet. Like it exists in theory, right? So I think understanding that is pretty important. I mean, we are more on the trading infrastructure side like that than more than core research, like understanding layer 3s and layer 2s and how they interact. I think that is deep, deep tech, right? So if you are an engineer, I think it's worthwhile understanding that. That's like understanding, iOS a long time ago. Right? I think if you're early in that space, you're hot commodity.
Right.
If you can do it, right? I don't know if you remember, but like Solidity engineers were so rare back when ETH was so hot and people were doing ICOs like crazy. You couldn't find a Solidity engineer. And somebody who took like a 1-week course would charge like $500K.
Wow.
Yeah, because people just had money, right? And so in the future, I think blockchain engineers will be a very hot topic. Even more rare because no schools will teach it.
True.
Right? So if you learn it yourself, I think this is going to be very important. Those are engineering people. If you're not an engineer and you want to enter into this space, same thing. Join a company first.
I think the more I got into this crypto space or like a entrepreneurship journey, that there are so much things I can learn from the street, from the school, of course. So how do you learn new things? Do you have any routine, or what do you use preferably? For example, like do you watch YouTube or meeting new people? Because there are so much new technologies coming out every day.
Yeah. I read a lot. I don't do social media. I haven't done social media. So when people send me like IG links, I can't open it. So it's sometimes it's quite sad. So I had to find websites that allow me to open IG links without an account to see what they're sending me.
Yeah.
Usually it's useless, but sometimes it's useful, right?
Yeah.
I watch YouTube for working out stuff, but not for like real any kind of practical knowledge, because I don't really believe in that.
Yeah.
I read a lot though, and I don't know. This is just me, like how I've been like over the last, like as an entrepreneur, the ups and downs. You know, as we all know, like you tend to become a very philosophical,
True.
right?
Yeah.
About life and the meaning of life.
True.
Right? Like it's not blockchain. I'll tell you that. The meaning of life is not blockchain. You know, I have a new daughter, and I have a new daughter on the way, and so you know, some people will say it's family, right? That's the meaning of life. So I don't think it's that simple, right? I don't think it's that simple that the meaning of life is your family or something like that. And so I've been trying to decipher a lot of that by reading a lot. And sometimes I don't read. I usually read like nonfiction, and what I've been trying to do more recently is get away from abstraction. And so what I mean by that is like most of our life is a derivative of a derivative of a derivative, right? Like how I feel about something is a derivative of your parents and then 30 years of your life plus whether you are hungover or whatever. Like it's a derivative. But there are things that are pretty fundamental, right? That are not derivative. Like I'm hungry. That's not derivative. Sometimes it is because you're not really hungry, but your stomach is expanded, whatever. But what I mean to say is there are certain emotions and thoughts that are not derivative. And I think a lot of business is like that too, right? Like as long as you can focus on things that are not, that are like kind of core and fundamental to a business or your life, I think that's like really, really important because we lose track of that a lot, right? And what's helped me a lot recently is that I think like everybody's really smart and everybody has really like their own thoughts, but what gets in the way of actually exercising that is yourself, right? Like you could have genius thoughts or whatever, and then you'll say like real life gets in the way. It's bullshit. You're just lazy. It's bullshit, right? But there's only 24 hours in a day, so then you have to compartmentalize like what you actually want to do, right? Like you can't really do everything. Like we're here right now, so we can't do everything. Like I can't do squats here. Like I can't do that, right? So then afterwards, in the evening, I want to go to the gym, so I'm going to do that, right? And so because of that, like I haven't been drinking for 8 months. Like, you know, that's helped me add a lot of hours to my day. Not necessarily because I just wanted to stop drinking, but I wanted to add hours to my day. That was like really important to me. I need to spend time with my kids. I need to do my work. I need to go to the gym. So there's stuff that I need to do. But when I did that, which was also from like books and like learning and trying to do stuff, I realized that my thoughts became a lot clearer.
True.
And what I mean to say is like the answer is usually there.
When you're
like
clear.
in your mind.
Yeah.
No, like whatever thing you are facing, the answer is there inside. And most of the time it's hidden, but a lot of the time it's ignored.
Right.
It's ignored because it's hard. Usually. Like in my life, I found that the answer is always the hardest thing that you don't want to do.
Very true.
It's always the answer. Like 100% of the time, it's the answer. And then you will your brain will do whatever it can to prevent you from doing it.
Because
Like,
it's too hard.
It's too hard. It'll make any kind of excuse to tell you not to do it. And so I learned this. This is something that I started doing too. Like, and a lot of people do this. Like, you know, a lot of the new gurus like talk about cold showers, right, or cold plunge.
Yeah.
So it's not a real reaction, but there's something called a flinch, right? So when you think about a cold shower, your brain starts talking to you, right?
Literally.
Right? Yeah. So, don't go in there. Oh, it's gonna be terrible, right? You might have a heart attack. You know, Korean parents love saying that.
Yeah.
You're gonna have a heart attack if you jump in the pool, right? It's gonna be terrible. It's gonna hurt. Like you're gonna shake. It's gonna be bad. Nothing will happen to you. Nothing. You will not die. It's not that cold. You know, it's just not warm, right? And so like I started taking cold showers because like one of the things was you can train your mind to do hard things, but you can't do it if you can't do physical hard things. Because that's the easiest command. The easiest command is like pick something up, do something or whatever. And everything else is like so much more complex than that. So if you can command your body to do something physical, doing things that are more abstract and difficult become easier. Like that's the theory behind it. And so for me, I try to do the hard thing, like the thing that I don't want to do early in my day, and it's helped a lot in the business.
Makes
the
sense.
conversation I don't want to have, that usually terrifies people. There's probably one person a day for everybody. There's a conversation you don't want to have.
True.
So I do that first. And then the fun stuff I do like later in the day when I have no willpower. And I'm tired, right? Like I go to the gym or whatever.
Yeah.
Like, you know. So yeah, I think that's the message for me is like I read a lot to get to the point to try and understand that I think abstraction is bullshit. And there are more fundamental answers. And everything else is just noise. Well, not noise. It's an excuse.
True.
It's an excuse.
Yeah. So let's go back to since we're talking about your daily routine, including all the hard things to do in the morning. What kind of like a CEO are you at the company? Since you've been doing this founder journey for over a decade, and then you must have certain things that you do at your company, and then your criteria for your the new hires and such things.
So I try to be pretty hands-on, like relatively with new hires, but I do delegate that out to my management only because like I can't really speak to their talent, right? Particularly technical stuff.
True.
I'm not the one that's going to be going through their code or asking them questions. So I try to be more. I delegate more with that. But I try to be very clear about my culture with my team, and I hope I'm reflecting it. But it's more of a, it's I want it to be. I don't know if it is, but I want it to be a culture of innovation, right? And I don't want it to be held by like you need to do this at work, and in Korea that's hard. It was easier in the United States, but like it's more of do you have the freedom to create something. But you need to take ownership of it. Otherwise, you can do whatever you want.
True.
Right? You don't have to be at work. Like you don't have to do anything. But you have to be mature enough to know when it's necessary for you to be at work, when it's necessary for you to do teamwork, to communicate and things like this. So that's kind of the culture that I've tried to cultivate at the company. And I think it's done well because I used to travel a lot, and it was hard for me to be there all the time. And so I do think like my management has done a good job of taking that ownership, right? And not necessarily because of like FaceTime and like yelling at their employees, but they take a lot of time off. They work remotely, but the pride and the ownership in the work that they do, driving toward the vision that we're trying to create, I think that is what I've tried to do. But that's it's like one of those things that's difficult because it's like the tension of the push and pull, right? It's the how much freedom is enough freedom, and how much direction is enough direction. And I think that's something you learn every day.
Right.
Yeah.
So there's definitely the culture difference between the US and the Korea.
Sure.
And then since you are hiring most of the people in Korea, right?
Yeah.
So I think people in startup scene, they are expecting or they prefer like an American culture in like a Korean startup scene.
Sure.
So I'm pretty sure your like a future employee will watch this show and then see what you're thinking about those things, and then they want to see how the company environment that reflects the US background to the team.
Yeah, I mean, I think there's like this like romanticization of American culture, right? Like this free like bananas and milkshakes and shit. I don't know why I said bananas and milkshakes, but anyway, like just like this freedom. But like I said before, like it's a two-way street, right? So with freedom comes great responsibilities. Like it's like the Spider-Man like dialogue, right? Like with great power comes great responsibility. A lot of people, like if you go to, this is an interesting one. So if you go to cafes here, right? Before, like, I don't know, like 5 or 6 years ago, maybe it was a little less. Like you didn't see like tons of people with laptops. like sitting at the cafe, like maybe 6 or 7 years ago. Now it's different. Now there's a lot of people,
With the laptop.
but they're studying. Most of them are studying, right?
Oh.
It's mostly academic
Yeah.
most of the time. Sometimes it's work. Also depends on the neighborhood, but a lot of it is academic. Like working at a cafe, I don't think is not that popularized as of yet. You go in the States, everyone has a laptop. Starbucks, everyone's working. They're not studying. Everyone's working, right? They're not coming from Hagwon or whatever. Like everyone's just working, right? And so this, you know, and I tell this to my team too, and yes, it will exist in posterity. So I have to be careful about what I say. There is a very clear distinction, like between I think the cultures, and I think the expectation is like no konde culture, you know, freedom to do stuff. But I think sometimes people forget the other side of that. Is that the freedom to create stuff means you have to create stuff. Like that's
Totally.
the expectation.
Right.
Even if without direction, you are expected to create stuff. That is immense pressure. Actually, much more pressure than somebody breathing down your neck and saying, do this, do this, do this. Yes, that's stressful. That's a different kind of stress than, oh shit, what do I do? It's almost like a founder level stress,
Right.
right? You have an employee, like I work at a big company like Samsung, and then you have a guy who's a founder, right? The founder stress is more.
Right.
It's going to be more, right?
Yeah.
Why is it more? We're not really sure, but it's because you start with a vacuum. There's nothing there. There's
Nothing
no
there.
direction. There's no tokchok. There's no pressure, right? There's no pressure to do it. The only pressure is do it, right? And so that I think is the primary difference. But another thing that we try to put into our team as well is voice. Like you need to speak up. You need to say something. You need to be like, this is fucked up, you know? This is good. This is messed up. Like you need to say something, right? And so our team is actually quite good at that. Like
Good.
everyone has something to say, like sometimes too much, but everyone has something to say, right? Everyone has something to say. So I think that's great. I think that's the important part of like a healthy and like a productive culture. If no one's saying anything, nothing gets produced. I'm 100% convinced of that.
True.
If just the founder is talking or CEO, nothing happens. Yeah, something looks like it's not going anywhere. Because they don't believe it. Through dialogue, even if you hate it, you'll do it. Because you lost the fight, right? A fair fight, right? So I think that's really, really important. And on the culture side of things, I think, I think people are doing very well. You know, Korea has such amazing talent, right? Amazing talent, both technical and not technical. You know, people are creative. People, you know, a lot of the culture has changed around startups, right? Wanting to join startups. I think there's just the next step of that, which is like taking like true ownership of why you want to be there, right? And a lot of people join startups because they want to have impact, but I don't think they really understand what that means.
They have no idea.
Yeah, they have no idea. Having an impact, that's huge. It's huge, right? Like you built a thing that we're actually going to use and it's going to kill us or sink us. Like it's important, man. Like, yeah, sure, the CEO might have had the idea, but you built it. So
Yeah.
better fucking work, right?
Yes.
Yeah. It's like, oh no, I'm done. I'm just going to go somewhere else. So yeah.
So speaking of build something to impact, so Vegax experts in a kimchi premium, which is tax-free in Korea still. So can you explain a little bit about how you can do it with being an expert in a kimchi premium stuff?
Yeah. So, you know, to take a step back, like the kimchi premium got like famous for good and bad reasons. You know, FTX was a big player in it, but it was very big for a while. And before like capital controls got very strict in Korea, I think there was people are actually moving money in and out. So we don't actually do any repatriation. Everything is on the up and up. But if you actually look at exchanges across the world, there are price differences. And the price differences exist because of all the reasons we talked about in the beginning. The infrastructure doesn't exist. The players are too small. Like people don't really understand like cross-border FX stuff. And so we have the unique opportunity of looking both at the Korean, which is a major crypto market, as well as the global markets. And because the price differences exist, we can use our machine learning algorithms to synthetically arbitrage it, like on a risk basis, without actually moving money, right? If we think it's expensive here and it's cheap there, then we're just going to buy it and close it and buy it and close it. And we just keep doing that, right? And that opportunity exists because the prices are different. The reason like we do it in Korea or like any other premium, like we call it the kimchi premium because it's relevant to Korea.
Yeah.
But like there was the yen premium was quite high,
Right.
But it's also tied to the size of the market, and it's also tied to currency, right? The way the currencies work with each other, USD versus the local currency. There's also arbitrage between centralized exchanges and decentralized exchanges.
Even like a CEX, a DEX have a different price
That's right.
in it.
That's right.
Because
That's
there's
right.
no infrastructure.
Yeah, there's no
exists in that yet.
infrastructure. So we built the algorithm for that and the infrastructure, but the liquidity is quite thin, right? So we aren't trading that heavily on decentralized exchanges. I do think the future will be decentralized exchanges, though. And the term decentralized has such a bad
Yeah.
connotation. It just means it's not a company, in my opinion. That's all it means. It's actually infrastructure that is able to act without human intervention.
True.
That is what a decentralized blah blah blah
Right.
is.
Right.
The decision making is not centralized, and I think that's very important. And we've also built our own decentralized exchange that we plan on rolling out like in the future. But that is built cross currency. So one of the biggest problems right now is that you need stable coins and like all these different currencies localized. We've created a decentralized ways to do FX. So I can trade in Korean won, Japanese yen, euro, whatever on the decentralized exchange.
Wow.
Yeah. So, I think the opportunities are endless, but right now, like the kimchi premium, there are these systematic inefficiencies in the market that we can take advantage of that won't exist in 10 years,
Right.
maybe less than that. In which case, there's other opportunities because the size is much bigger. But right now, we are able to offer that kind of unique opportunity to Korean investors.
Right. So whenever I speak to the fast looking for startups
Sure.
in crypto space, and then they're talking about the rise of the needs from the companies, enterprises that they want to hold BTC or Ethereum, but they just don't know how to like turn their KRW Korean won to the USDT or something else so that they can provide the liquidity to the prop trading firm. Do you have any solution to them? Or then probably you are dealing with it every day.
Yeah, I mean, I think OTC services have been around forever. I mean, they're still around, right? And in the U.S., you bilateral agreements where you can agency supports, purchasing of that, but that's just a service. The bigger problem is they actually do not know how.
They don't know how to do it.
What it is. Like
They have no idea.
Yeah, like what wallet does it go? Like that's a big problem. Like of corporations and enterprises we talk to, it's like, oh, we'd like to buy Bitcoin. But this is exactly what I'm talking about when I talk about nothing exists yet. Like the level of understanding, broadly speaking, on average is so low that service, like buying for them, that's going to become an automated service instantly. The moment they realize how to do it. And what I mean by that is like OTC is a zero margin business in America, almost zero margin. Like $50 million of Bitcoin, you'll make like $10,000, right? Like it's like zero margin business because on the other side, you have to market make, to make your own money, right? You're buying and selling. Citadel does that. They buy blocks, not Bitcoin, but of equities. So regulatory clarity, I think, is very important. I hesitate to talk about regulations because it's complex.
Yes.
The relationships are complex. But regulatory clarity is always better than non-clarity, right? And when I think about money or capital, it doesn't care about regulations, right? People do, but money doesn't. I can guarantee that. money will always flow to the highest return. Always. It'll never stop, right? And yeah, people are making decisions. They'll be like, oh, Sang, what are you saying? Like, people are actually making decisions. So that's what I'm saying. If you think about the fundamental math of what money has to do, it has to go to the highest, right? No matter what. Like, your spreadsheet will always end up at the highest solution, right? No matter how you block it, it has to go there. Because if it doesn't, you're losing money, right?
Sure.
Compared to your competitors. So why I say regulatory clarity is important is when it's not clear, at least in my limited experience, people break stuff a lot.
Which is?
Like anything. Like if regulations aren't clear, people do stuff because they can. And that's kind of it. Like that's kind of the end of it, right? Like when we think about FTX.
Oh, yeah.
So there's an exchange and then it's owned by a hedge fund, okay? That's a very weird relationship. It's not weird, it's illegal in equities. Goldman Sachs does not own New York Stock Exchange. That would be very conflicted, right? Like, I'm a trader, but I also own the platform you buy and sell, so I can always front run you. I can always be in front of your trade.
That's what Citadel does, right?
Well, no.
Robinhood.
No, that's different because that's still arm's length from the exchange, right?
Oh.
They are not the platform. They're paying for order flow, but Citadel also has inventory, right? So they take Apple stock and they just hold it, for example. And then when Robinhood gets orders, they're buying and selling from their inventory. So they're not an exchange. So, but Citadel's not allowed to own NASDAQ. The actual clearing. So the risk that Citadel gets paid for is what we call inventory risk. I have to hold Apple, right? Then I take the price risk. But if I own the exchange, I take no price risk and I can just dump it all the time. Faster than you can as a customer. So anyway, there's a long way. Like let's not talk about that anymore.
Yeah.
It drives me crazy. But because of that, people just like kind of do things, right? And sure, like all crypto businesses, we've been operating in this weird realm because most rules don't even exist. Like it's not that it's illegal; it's just that it doesn't exist. It's just completely irrelevant, right? Like you can't even talk about it. Like, you know, I don't know if you saw that, but a while back, the Senate in the U.S. was trying to pass a bill of calling every Bitcoin node a broker dealer. They wanted to make it an investment bank to regulate them. It makes no sense. It's a computer. How can you license a computer? Like, but the person who wrote the law thought it was a person. Like responsible for these nodes, and like you would make that person responsible. Like not that these are just automated servers, just like kind of running all the time. Sure, there's an owner, but it's just running, right? It's not trying to do anything, you know. But they're like, oh, it's making Bitcoin, so it should be a broker dealer. Like it was insane. It was chaos. But because of this misunderstanding with regulators, because of this lack of regulation, I think people end up like going, well, what do we do?
Yeah. They're just lost.
Yeah, they're lost, right? Like, there's no institutional like VASP right now firm, and I think it's a positive to regulate faster. People are scared of regulation, but it's always the devil you know.
Yeah.
Always the devil you know is better, right? So like if you know, then you can act. In the other side, and I think that's really important. And like I said, I won't talk about what I think about regulators or regulations in Korea or the US. I think people are trying their best, maybe. But I do think moving faster is better.
Yes. So let's talk about there's of course, if you are running a company and then starting your own startup company, there's ups and downs in your life as well. And what was the rock bottom moment that you are facing when you're working at the Vegax?
Well, I think it's all one company, right? Like through the years, and you run out of money, you lose your team members, you run out of money again, you lose your team members again. You know, I think it makes you very emotionally mature. Over time, right? Like it's funny, right? Because I hear about like a lot of the rock bottom stories, like this like kind of happened, but when I look back on it, like it wasn't really that bad. Right. Well, now, right? It felt terrible at the time. I was I signed a Series A deal with a Korean conglomerate, which I will not name, right? Mm-hmm. So they signed the subscription documents. Mm-hmm. They signed. Then the big boss of the big boss heard that the smaller boss approved the deal without telling him. Mm-hmm. So he's like, we're not doing the deal. This is the largest conglomerate of the largest conglomerate in Korea. Mm-hmm. So the option was you sue them, I do, or you just give up. Mm-hmm. When I thought we were going to get the money in the bank. So we just gave up.
Yep.
It was like a 6-month due diligence process. It was insane, right?
Insane.
And, like losing investors, I think when you're like that close, right? Yeah. To runway or whatever, like that's happened multiple times. But, I've heard of other stories, which is far worse than mine. So like these days I look back and I'm like, maybe I haven't hit rock bottom yet. maybe this is a bad sign. Maybe I haven't hit rock bottom yet. But I also think it's perspective, right? And there's like memory dislocation. So like the way you think about things now actually changes the way you process memory, right? Mm-hmm. And recently, because I've done the things that I talked about before, trying to train my brain to do hard things and like getting over things, I think that it all is not as bad as you think it is. Like for people that are listening, I guess. Horowitz's book, The Hard Thing About Hard Things. Yeah. So there was a line where he was a week away from bankruptcy and he was traveling to the IPO during 2008 after the financial crisis or something, or 2000, sorry. Yeah. After the dot-com. Dot-com bubble. And he was trying to raise an IPO. He was 1 week from runway. And then his father-in-law called him and said, your wife died, but she's okay now. Her heart stopped and they brought her back. And then he was talking to his wife and he's like, okay, I'll come home right now. Mm-hmm. And she said, no, don't come home. You can't do anything here. Just go finish the roadshow. And so, I think it's all perspective on like what rock bottom means. And I think the emotional lows and highs of like what I think happened in founder life actually has nothing to do with like the money or the people or anything. It's this like inordinate fear of failure.
Right.
Mm-hmm. And the bottom that people talk about is how close do you feel to failure?
Yes.
Right?
Yeah.
But you can actually make yourself think you are far from failure even when the same thing happens.
Yes.
Right? So that's what I think is funny. I don't think it's circumstantial at all. Mm-hmm. Like you could get hit by a meteor and be like super happy, right? Like I don't think it's circumstantial at all. It's like this whole thing of what I define my failure to be. So like my early days, I remember it was like not delivering things on time, or the engineers were late, or like, I wasn't hitting revenue targets, or like, it was that kind of stuff. Yeah. Then it was like, oh my God, like, we're running out of money, whatever. Then it's like I lost my key team members. Like, so my rock bottoms kept changing.
Yeah.
It's at the time. And when I look back and I say, oh, was this the worst when I lost my key engineer? Was that the worst? It's like, actually, it wasn't the worst. Like it could get far worse than that, right? And so that's what I think about when I think about rock bottom. I mean, it's not as an interesting of a story because it's always the same story. Mm-hmm. Right. Every founder has the same goddamn story, yes. Right? So you ran out of money, you lost your CTO. It's like everybody has this damn story. But like, oh, I lost my CTO and then I got hit by a bus. It's like, wow, all right, you won, right? Like kind of thing. It's like there's very few things that I think can really take you out of the game, except being out of the game. Right. And so that's what I'm thankful for now. I'm thankful for now because I have a new perspective. Like as long as you're playing, you're still in the game.
Yep.
Right. And so as long as you're playing, it's all good.
Yeah. How about the other side? Like, what was the happy moment being a founder? at your company?
I don't remember.
Yeah.
I don't remember. I
feel you.
remember. People say like you should celebrate the
Yeah.
wins. I've been trying to for myself too, which is to change the perspective of startup life. Because like I run the KSC, the nonprofit, and like, for Korean founders, and when we talk to new founders, they're all like very passionate, like super happy, and ask for advice. And then a lot of my other founder friends are like, "Don't do it, don't do it, good God, don't do it." And then some people are like, "Oh yeah, you should try it. You should definitely try it out. You're gonna regret what you don't do, right? Whatever." So I'm trying to go toward that side of things, but it's hard. It's harder than I thought. Of changing that perspective and celebrating the small wins. I think our peak was when we had, one of the peaks, let's say, recent peaks, was when we had completed this piece of infrastructure that we needed to like complete the trade. And the reason why I say that was like a peak, it was because it wasn't a big piece of what we were doing, but it was so critical that like people were like working like days and nights and trying to get that done. And it was after FTX. So I think going through that and then redefining what we wanted to build right after we had done layoffs, like huge layoffs, and the team coming together to do that in the face of the chaos and like the layoffs was a big win. Like I think that's a big, as a founder, these are the things that you saw. It's not like big funding, it's not that. Like that's actually just like a part of the path or journey. Like even an exit, I think is just a part of the journey. I think the important thing is like, were you able to rally the team to do something hard in the face of hardship? I would say that's my peak.
That's good. So let's talk about KSE.
Yeah.
So you've been, I had a lot of help from that organization when I was in New York, when I was doing nothing at the time. I was trying to achieve something, but I couldn't do anything done. But I think the KSE is a solid community in New York for Koreans.
Yeah.
And so you are doing amazing things at the community. So I want to know, like, I want to learn how you guys thinking about the empower the members of the community.
Yeah. So, when I first started KSC, which was right around when we met, actually, like not long after, there were no Korean organizations. Like the reason I actually started is because I wanted to find other Korean founders, which was pretty rare at the time. There were a few, but everyone was working really, really hard.
Yeah.
Right? So I think that was the start of the journey. People tell me like, you're so busy, like why, like you're a founder, like why are you doing these things? And it was like, well, for me, like living in the States, right, growing up in the States, like I think Koreans are very, they like to be together.
True.
But they hate working together.
Exactly.
They hate working. They love being with each other, but they hate working together. Hyper competitive. And so, I always thought that there was a better way. The entrepreneurship and the innovation scene was quite lacking. Everybody wants to be a banker, lawyer, whatever, doctor. So I wanted to help that go forward, but like we were like we still are, right? Volunteer-run organization, and I didn't know a lot of what I knew now back at the time. And so, fast forward to today, we've done events with Kotra and like the government organizations. We used to hold very large conferences and like pitch events. But then during COVID, we couldn't do a lot of these in-person events. So we kind of went back to the drawing board with the board. And so what we want to develop is a platform that helps Korean business and founders be more successful. And we've tried to categorize these prongs. It's not hanging out and having soju. That doesn't make you more successful, right? Like, so sure, it's fun, but that's just one part of like the de-stressing or something. or networking, let's call it.
Yeah.
It's information about the startup journey, right? Like it's like workshops, it's advice from like direct mentors, it's funding, right? And then it's information, right? Like information about law firms or like VCs or whatever. And so we broke it down into these 4 things. And so we're trying to execute on those 4 things, right? So the information and advice from founders, we're going to do in-person events, founder chats. We're also doing a podcast like yourself with like founders from all around the world. We're just going to start chatting with them, ask them about like key pieces of advice for new founders. Then we have in-person workshops, right? So that we're going to do like half day. How do you develop PFM, whatever, PMF, I mean, these kind of things. And then we're launching a seed fund, actually.
Nice.
So we're launching a seed fund because, like I said, Korean like to be together. So a lot of Korean professionals want to get involved in the startup scene, but they don't know how. So we're going to basically act as an organization, as a buffer to turn them into angel investors, right? So we will be the filter, and they'll be the angel investors. So they can all say they're angel. Everybody's an angel investor. And then, that's what we've been focusing on right now. And then the mentorship side. So, a lot of founders want to give back, but they don't know how or scheduling, or that's hard. So we want to create a platform to do that.
Nice. Makes sense. So we are heading to the end for this podcast. So what was your how was your experience with the podcast?
Yeah.
Just wanted to hear what you think
I
about
do.
it. Yeah.
Yeah, as you know, like I do a fair amount of speaking, or I used to do a fair amount of speaking.
Yeah.
I've never done a video podcast. I think it's it feels like there's an audience.
Yeah.
It feels like there's someone watching right now.
Oh, yeah.
We're not live, right?
We're not live.
It's recorded, yeah, but it feels like there's someone watching. And because of that, I think I'm speaking like someone's watching. Maybe it'd be more natural, more fun if I felt like somebody wasn't watching.
Yeah.
I think you're a very natural moderator, so it's a very easy conversation.
Awesome. Thank you so much for coming here.
Thank you for having me.
Awesome.
Yeah.